Early on Monday, we got an article that came out from Bloomberg that the Bank of Japan, Japan's central bank, also abbreviated as the BOJ, became the biggest owner of Japanese stocks with a $434 billion hoard. And the chart is pretty nuts, as you can see there on your screen. The Bank of Japan has taken over as the biggest owner of the nation's stocks, with the total value of its holdings climbing well above $400 billion. Massive exchange-traded fund purchases over the years by the Bank of Japan. Massive exchange-traded fund purchases by the Bank of Japan to support the market amid the pandemic, because asset prices must go up. This year, combined with a subsequent valuation gains, pushed its Japanese equity portfolio to 45.1 trillion yen, or 434 billion in November, according to estimates by Shingo Aide, chief equity strategist at NLI Research Institute. And the Bank of Japan and the Japanese government are not done. In the last couple hours, we got a news story out that Japan is going to unleash another 73.6 trillion yen stimulus package to prop up businesses and other central planning and bailouts. So it is going to get crazy up in here with Japanification, stagflate tax lie, bailouts, and all this other currency and credit that's going to be sloshing around. So then it is no wonder that the bear market in Japanese stocks, which has been ongoing for many, many years, about 30 years now, as you can see there on your screen, it looks like it's basically over. Now, granted, the Japanese stock market, or Nikkei, is still about 35% below that peak there around 1989, 1990, as you can see there on your screen. However, with the green arrow, it looks like dips are now being bought by the Bank of Japan, Japan Central Bank, and also probably hedge funds, global macro tourists, because the Bank of Japan is now the largest owner. Japan Central Bank is now the largest owner of Japanese stocks and not Japan's pension funds. So it looks like finally, after about 30 years, the Japanese stock market, thanks to central banks, thanks to the Bank of Japan, is finally out of the bear market. Also because Ben Bernanke was, I think, hired as a consultant a few years ago. I think 2015 or 2016, not too long after he left the Fed. I think the Bank of Japan hired Ben Bernanke, and he told them to devalue the yen more and to try to move the asset prices higher with the wealth effect, because that's been official Fed policy here for decades, going back to the Alan Greenspan Fed, to try to manipulate the prices of stocks, bonds, and real estate higher, at least in nominal value. So mission accomplished. Looks like the bear market in Japanese stocks is finally coming to an end, although this is an artificial bull market with all this central bank currency and credit creation sloshing around. I get asked this question an enormous amount. Why can't every central bank successfully, and I'm using air quotes, copy the Bank of Japan and use Japanification? First off, if they do that, there's going to be less goods being produced globally, and yet every or almost every central bank is attempting to copy what the Bank of Japan has done for decades with Japanification, which is now monetize government debt to try to devalue their currency, prevent the size of the government from contracting, and to fight deflation, and then stagflate tax and lie on asset prices so they can reap those higher prices for stocks, bonds, and real estate. The government can get more. This has created lots of dip buyers for stocks, bonds, and real estate globally. Also, asset bubbles all over the globe. Talk about that in a second. More currency and credit. Wall Street banks are still selling lots of bonds, credit to corporations, corporate bonds. They're loaning to the U.S. Treasury. The banks are buying enormous amounts of U.S. Treasury still, as well as selling corporate bonds. Credit to corporations, credit instruments, which they're probably dumping on suckers, the pension funds, aka the pension funds, and over-the-counter or OTC derivatives, aka the toxic sausage, again, to the pension funds most likely, and also probably to bond fund managers and other suckers, mostly mutual funds. So credit is growing, just not to Main Street, small, medium-sized businesses. We're seeing all these tragedies of how the real economy, these poor restaurant owners and bricks and mortar retailers, they're not being allowed by these politicians and bureaucrats, even though they can take responsible safety actions to protect their employees and their customers. They're not being even allowed the chance to do so. They're going to be forced into bankruptcy, while Amazon, Walmart, Costco, Target, and the large grocery store chains are allowed to open and they gain even more market share. Another reason, and this is why Japan has not had crazy inflation for decades, crazy asset price inflation that the Fed has managed to procure in the Dow, the S&P, real estate prices here, bond prices here in the US, is the yen carry trade. A lot of people are not familiar with the yen carry trade unless you're a financial professional. It is a funding currency trade that hedge funds, large banks, and family offices have used. And SoftBank and Wolf Richter has talked about this in his work, that SoftBank owns, and they're an enormously large technology company making a lot of technology investments all over the globe, but they've managed to borrow an enormous amount of savings from Japanese investors issuing bonds and other tricks. And then they also have invested that in technology bubbles for decades now, including the 1990s technology bubble, Chinese technology stocks, and others. And they own an enormous amount of commercial real estate in San Francisco, Silicon Valley, and enormous amounts of Silicon Valley technology investments as well. But the yen carry trade is how all this monetary inflation, this credit, has been exported out of Japan. So the Bank of Japan and the Japanese banks have managed to divert all of this fire hose of currency and credit, which is another example of the Cantillon Effect. And they've helped create asset bubbles along with the Federal Reserve. So you have the yen carry trade, which is more currency and credit sloshing around, which is more leveraged bets on currencies, bonds, derivatives. There's been a ton of these types of trades for decades now. And the Bank of Japan and Japanese banks are to blame for helping create asset bubbles and export this massive amount of monetary inflation out of Japan for decades now. You don't hear the deflationists talk about this because that is currency and credit creation, and it is sloshing around all over the global economy, especially in asset prices. It's created an enormous amount of distortions and asset bubbles for decades now. This is just another example of all these central banks, and I've been documenting this for months now, of all these central banks creating currency units out of thin air. Often they're monetizing their own government debt, but in this case, we had the Swiss National Bank, Switzerland's central bank, for about a 3.5-year period. They ran a euro peg and created an insane sum of currency units to try to weaken their currency, the Swiss franc. And what they ended up creating was all this currency units, and then they went and bought stocks with them. So of course, this is going to create asset price inflation, just massive amounts of asset price inflation. And the Swiss National Bank has put a lot of this, it looks like at least $100 billion into US stocks. So for a while, they owned, I think they were the largest share for a while in Facebook and other technology stocks. This is currency created out of thin air. This was not earned by Swiss companies that worked hard, saved, invested. This was literally currency units created out of thin air because central banks were trying to manipulate their exchange rate. And then with those currency units, they went and bought assets. So they either buy bonds, they buy stocks. Who knows? Maybe at some point they're going to buy real estate. They'll figure out probably other assets to buy. Maybe at some point they'll even buy Bitcoin or gold. We'll have to see. It's just getting ridiculous at this point. All the distortions, manipulations, rules changes, bailouts. It's a mess. Asset price inflation doesn't count. This is something I've read a lot of comments from deflationists, from Keynesians and deflationists and deflationistas, and they don't count any asset price inflation as inflation. So the Dow could be 30,000, 40,000, 50,000, 60,000. The real economy could be collapsing. There could be a new bond bull market where in some miraculous way the bond prices keep in a bull market. I don't know how, but somehow, some way, maybe the central banks will pay way over 100 cents on the dollar for all these bonds. Maybe the central banks will pay 110 cents on the dollar, 120 cents on the dollar, 130 cents on the dollar. Who knows? Just to maintain asset price inflation, to prop these things up. And most deflationists don't count any currency and credit created out of thin air to buy up stocks, bonds, real estate as inflationary. But yet we see this evidence of all the distortions while the real economy, things just get worse and worse. Credit's being issued nonstop to corporations still. They're issuing tons of corporate bonds still with no cash flow, I might add. Look at the warning that the Bank of International Settlements just put out. And the Cantillon Effect explains this perfectly. So governments, Wall Street banks, the large banks in other countries, because they're doing it too. So Japanese banks were involved with the yen carry trade, Chinese banks, European banks with the euro dollar market. All these large banks are all bad. In other countries, trading or buying assets, hedge funds, private equity, and large corporations get the newly created currency and credit first from the Cantillon Effect, and then they spend it. They're not investing it most of the time, or the majority of this currency and credit is not going into the real economy, unless maybe with their trading profits or investing profits in stocks, bonds, and real estate, or manipulating markets, or leverage currency trades, or leverage bond trades, or leverage derivatives trades, or leveraged options trades, or leverage futures contracts trades. Maybe they're buying Lamborghinis and they're buying Gucci handbags for their 2 or 3 sugar babies. I don't know. But the majority of this currency and credit that is being created out of thin air is going into asset prices, and the deflationists are not counting this. And this is why you have the majority of people saying that there is no evidence of inflation in Japan. Also, because I believe that a lot of the government statistics in Japan are also bogus as part of stagflate tax lie. But now you have clear evidence, as you've seen with the stock chart, that even asset prices in Japan, with Japan's stock market, the Nikkei, looks like it's out of a bear market and finally starting looks like a bull market, an artificial bull market, thanks to central banks. The Bank of Japan and other central banks. Looks like Ben Bernanke, that they hired as a consultant or a special advisor, looks like his policy of just print, baby print, QE programs, massive amounts of it, do even more, double down, triple down, whatever it takes to get asset prices higher with the phony wealth effect. Looks like they're finally starting to work even in Japan, as that a near 30-year bear market in stocks in Japan has finally ended. And the majority of new currency is not going into the real economy, although some does leak into supply chains, as I've been covering this now for months with different stories, with what all these different central banks are doing, whether it's the Reserve Bank of India, New Zealand Central Bank. All of these governments were in a currency war that the foreign exchange rates are not reflecting, because so many of these central banks are all doing the same thing. They're all doing it. It is nuts. Massive amounts of it. A new program announced today by Japan. Over 70 trillion yen, which is over $700 billion, which we'll have to see what the Bank of Japan decides to buy. Are they going to buy? They can't buy any more Japanese government bonds, can they? Maybe they're just going to buy even more Japanese stocks. So maybe for sure we're going to see the Japanese stock market, the Nikkei, finally get back that 35% that it still is lacking from the all-time high in the Nikkei in the next year or two. Maybe that's the plan for the central bankers in Japan, for the Bank of Japan, is with this new package, not only to bail out businesses in Japan, but also get the stock market revving so there's more tax revenues coming in from asset price sales, from successful stock trades. Please consider becoming a patron over on my Patreon and chipping in $5 or more per month, so that way I can continue to do my research and make unique content and be able to make a living. Because with my YouTube channel, my Google AdWords revenues have collapsed almost to zero. My YouTube channel subscribers have stopped growing in the last 9 months. There's no growth there. And my live stream shows have been shut down, and YouTube tech support is giving me all types of excuses, claiming that they did not put a strike on my account, even though I can't edit the title for a live stream show. I cannot turn monetization back on. I cannot even turn live chat back on. That's how bad things are with the live stream show. I have almost 150, and hopefully soon it will be over 150 unique pieces of content behind the paywall on Patreon in terms of well-researched articles. Some of the articles have taken me many, many hours to produce for lots of different topics about gold miners, silver miners, precious metal royalty and streaming companies, a lot of articles about the oil industry and other commodity industries, also global macro related articles. There's also audio podcasts on a lot of stock charts and technical analysis there too. And while you are getting unique content, if I go over 1,200 patrons and I stay there, I will sign up for another live streaming service just for patrons. So I will make this pledge, I will make this promise. If I go over 1,200 patrons and I stay there, so if I drop below 1,200 patrons, the promise is not going to stay. I have to stay at 1,200 patrons and stay there. I will start to do live stream shows just for patrons behind the paywall there. Will require additional capital. I will have to sign up. I think it's $100 a month for another service there to integrate with Patreon, to sign up there and integrate. So that will be an additional added bonus for patrons if you want to take me up on that. But please chip in if you can, as YouTube is basically trying to make this impossible for me to grow my channel or to make a living from making content.